Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everyone. I'm trying to turn on the music here. Hold on. Well, we'll go with oh man, where is it? There it is. Lo-fi. We'll go with lo-fi. Hey. It's Monday. I mean, it looks like we're going to have some reasonable activity because Fed speaker put the kibosh on the whole Treasuries rally over the weekend. Although I think, kind of given the prices that we're at, that seems pretty reasonable. But it could result in some decent action here today. And the Treasuries, we'll see. So let's come over to the charts and just kind of take inventory of where we're at. Starting with the Treasuries, of course, huge rally off of CPI. And then on Friday, and Friday was kind of a sleeper because we had a holiday, and now we're a little bit lower over the weekend. Not too much though. I mean, like we didn't crawl too much of that back. So I think that as long, between 3.9 and 4.1 is probably a fair price. Okay, so S&P 500 flat during that period. Oil kind of a little bit on the downturn this morning. By the way, China kind of, went hardcore on COVID restrictions again. So that's kind of going on. Gold and silver still pretty relatively high. Copper also up there, but beating a little bit more. The dollar coming back up to 107, but it sure is nice to see it below 110, right? Sure is nice to see it below 110. Bitcoin, meanwhile, I'm surprised. I feel that Bitcoin should keep selling, but so far it has not. So we'll see. We'll see. There could be more downturn in Bitcoin. I'd like to see 13K. That's basically where we're at now. This doesn't look quite right. Let's see here. Let's look at my lights. Yeah, that should be. There we go. Yeah. All right. Looks much better. You know what else? That's much better. And then, do I have it on here? I thought I had the hype one. Add it to my favorites. I want hype. I do have it on here. Oh, it's up there at the top. Let's see here. Oh, I gotta do something. I'm gonna enable somebody here. Slow start to the morning, all right? Hmm. 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 I must not have installed it yet. Oh, actually, you know what? I can do it this way. What's the date today? The 14th? Cool. Good morning, Tobias. I think it's going to be a slow start here. Oh my gosh, robots are out early? The robots are out on YouTube early today, huh? Is it really that late in Taiwan? I thought that, well, I guess Taiwan, so that's like 3 hours earlier than India. Yeah, okay. So I heard that reminds me, like, have you guys been following the whole FTX scandal, man? Like, I was just like, okay, cool, another cryptocurrency, because I've never really looked into them a whole lot. And now all of the dirt is coming out, you know, about like what the leaders and stuff were doing and all this stuff. It is hard to keep up with. Like, it is so crazy. like Sam and his girlfriend were doing all sorts of crazy stuff. There's let's just, because I don't want to get into, you know, I don't know. There's some content around there that's probably not appropriate for YouTube, let's just say. But there's some pretty funny memes out there about it now. So if you haven't looked at that, go and check that out. This like both Sam Bankman and his girlfriend Caroline are characters, let's just say. Yeah. I'm liking this track, but I feel like this track is a little bit too attitude for what a chill morning this is. Huh? I think for us here in the treasuries, we should just try and take it easy to begin with. Okay, now we got that all taken care of. Let's go through Twitter here. I don't have... No. No. Okay. Feel like I'm missing something, but I think we're okay. So it's just seeing Scott Adams tweeting his daily comic, but he was like kind of not liking what Donald Trump was doing the past few days, and a lot of people picked up on that and were like, if you've lost Scott Adams, then because he's been one of the most consistent supporters of Donald Trump. Although I don't know if it was really so much like he was a supporter so much as he was like he was saying, well, he's gonna win. And I think that what he's saying is that Donald Trump is no longer making smart moves. Good morning, Alex. But I gotta tell you, it's been on my mind a lot because we're still counting, in Arizona in particular. It's just crazy to me that we're like almost a week out and all these critical races have not been, resolved. This is the problem with the mail-in voting, right? Because you can continue to get votes in for like days and days afterwards. I really don't think that it's a good thing for people's what is confidence, for people's confidence in the election system, But I digress. The whole thing here though is like, okay, Republicans are a little upset right now, right? People are saying, well, the Republican Party needs to change. We need to do X, Y, and Z. And there's lots of different ideas about how the Republican Party should be changing and how they can be more competitive and everything. But like the whole thing is, there's so much noise. It's kind of hard to really determine where the real problem is, right? Like, is it just Donald Trump? Like, how can you say these ideas aren't resonating with voters when it seems like one of the biggest factors right now is whether or not somebody supports Donald Trump? And it's just causing chaos. But tomorrow, he's having a press conference, and we'll see if he's actually going to run for president or if he's baiting us. It could just be like his worst bait yet, right? But that's going to matter to trading. I don't know what time that is at though. But anyways, that is the political world right now. Republicans probably will still control the House, so. And Treasury's coming up here the top. I think, well, I don't know. Given the central bank speaker, kind of seems like the Federal Reserve would like interest rates to be a little bit higher, maybe above 4%. Do you have any thoughts on mortgage and housing market? People expect doom, but from what you're seeing, what is more probabilistic? Well, okay, so this is another one that's kind of we've entered into a time period now. You got to realize that there were a lot of threads that were like supposed to come to their conclusion at the election, and a lot of them did. Okay, so what's happening now is we're moving on to either issues that weren't resolved or new issues that have come up in the past week, where what's going on is a lot less clear, right? So in the housing market, well, the housing market was very clearly in the bubble from the Federal Reserve's excessive easing, right? But since they have started raising interest rates, man, mortgage demand just fell off a cliff. Like, it is literally like some of these mortgage processors might have to go kaput. Like, there's just not getting business. Okay. But despite all of that, prices in the housing market are not coming back all that much. So like, I think the thing is, homeowners, sellers know that they have the advantage and that people want to be in houses and they just can't afford it at the moment, you know? So I'm sure that a lot of those people are probably going to hold out for a year or two and say, well, I can go and get a better price, right? So like, the whole thing that I keep seeing out there is people saying, well, the prices have to come back further. This isn't in line with all of these things. Like, yeah, you look at all of those historical indicators and stuff like that. You gotta put those in perspective. Like, they don't control what the market's going to do. They just tell us what our market is relative to past markets. This is just the same thing with my crypto, the Buffett indicator for cryptocurrencies, right? It's showing you a relative valuation basis based on the past, and a good valuation, historically speaking, would be down 50% from here. Okay, but that it doesn't cause it to come down, right? The orders are what has to cause it to come down. People would have to sell out of their houses, right? Sell out of their houses at losses. I don't think that they're going to do that. So there's this mass of people out there that I really think that their analysis, I really think their analysis comes from a place of, I want to own a house, right? I think there's a lot of that going on out there. So I think you have to be a little bit skeptical of some of the analysis and so on and so forth that people are putting out there, right? So you would apply what you teach her to things like housing, like past performance has no bearing on / the current / future. Yeah, or I think that it's an incorrect application or should I say application? Like what's the way? Like if your strategy is calculate some metric based on the past and then trade solely based off of that, it kind of depends on your metric, of course, but like the whole thing is, why? Like, why would it be a good metric, right? Because some metrics are good, like the Buffett indicator. It's a good metric. It's a pretty good way of telling whether stocks are a buy, right? But we know why. Like we can kind of go through and explain why it is such, right? And we should be able to come in and say, well, here's why it does or doesn't apply in this particular situation, right? So that's kind of the thing that I'm seeing here in the housing market is everybody saying, well, the housing market needs to come way, way, way down. And I'm like, well, yeah, except for that you haven't been building houses for 10 years. So I don't think that you can really look back at past metrics unless that past metric is factoring in to some degree the low supply in the housing market, you know? I'm doing right now in real time on housing. I'm trying to submit offers on housing based on the average square foot over a period of time. With a slight premium. But I guess my whole point is just that we should expect housing to continue to be relatively high. And any kind of like historical measure that we're going to look at, it's probably going to look historically high. Why? Because they're just not building enough houses. And what's going on right now isn't really helping that, right? And it's kind of messed up, right? Because like the whole thing is, in order for housing to become affordable again, and to be honest, I feel like that even if we go back like 4 years ago, because housing was on a relative basis very affordable 4 years ago, even if you go back then, I think that housing could be way more affordable than it's been, right? But you have to build a lot more houses. And everything that I see the government doing is not helping the situation. It's not encouraging people to become home builders. It's encouraging home builders to be more cautious about what they decide to build, you know? Any news from Xi? You know, I haven't been following that. They are supposed to meet, right? But like, what are they going to say? What's going to come out of it? I don't get what that's supposed to be about. Yeah. Multiple retailers that have been around the block said, forget your parents' housing market. It's not. In fact, if anything, like here's the crazy thing is that I think if anything, now is a good time to get into a property because of the high interest rates should bring the prices down, relatively speaking, and hope that the interest rates collapse in the next year and you're able to refinance. That's like, if you're the person willing to take on risk, I think that's the risky play, right? Your kinetic data is down. That's curious. Oh, that's what you're trying to do, huh? The other one is, so here's the question that I find more interesting. I mean, because I guess I find it more interesting because I'm in a house spot. What about the corporate real estate market, business real estate, right? Because there hasn't been much of a need for office space and things like that since COVID. But at the same time, I think that some more and more companies are starting to realize and experience the negative effects of everybody working from home and maybe want to move away from it to some extent. But is corporate real estate ever going to recover? I don't know. Take my like for the algorithm. Thank you, Susie. I thought it said my life. I'm like, what? My life for honor. Maybe an easing for the semiconductor restrictions, but I doubt that. No, probably, yeah, definitely not. Because that one was interesting. Isn't it so interesting when there's got to be like information, like some sort of foreign policy information that we got about China. It's just like all of a sudden you get like the whole establishment moves at once. And that was the case with semiconductor restrictions, right? Oh, you'll be back? All right. Thanks for stopping by. It was like all of the, there was this point like before the election, before the 2020 election, where, but after the trade war was quote unquote resolved, that all of a sudden everybody was like, oh, like China's like a big problem. Like this isn't okay anymore, right? And then there was this point earlier this year where it was just all of a sudden it was like, oh, guys, like we really, really need to build up the United States semiconductor build again. Like really. And then they started doing all these subsidies and started getting TSMC to make plants in Arizona and all this sort of stuff. It was like, I would think that maybe what it was is they got the report that President Xi is just absolutely determined that he's going to invade Taiwan. That must be what it is. Is it? I think that must be what it is that they're 100% certain that Xi wants to invade Taiwan, and that they might it might be a, like, it seems to me at this point, I could be dead wrong. Obviously, I don't know anything. Obviously, I don't have any kind of inside track or anything like that. But my impression is that China's going to do it. And the best that the United States and the West can do at this point now is just make sure that that's a really, really bad decision for China. You know? It seems to me that's where they're going. So you just you pay attention when you get something where it's like the foreign policy / intelligence agencies seem to be agreed on something, and then all of Congress seems to be agreed on something, and it happens really, really quickly, and like fairly low key too, right? Like you'll read headlines about it, but it won't be the top headline. Pay attention to those, I'm telling you. Bitcoin turning back down this morning, by the way, since we've started speaking. They're kind of on the downturn. S&P 500 kind of on the downturn too. Treasury's not doing much of anything. I'm still getting like hiccups and stuff. House GOP presses towards. I'm reading Politico here because I don't know what's open. I should come back and check here. Is there anything I missed? Oh, Jigsaw Trading Black Friday sale. So they are giving $100 discounts on Jigsaw. So if you've ever been interested in purchasing Jigsaw, it's only available to the first 100 customers. Probably worth doing. I'll link to you guys here. Probably shouldn't, because then you won't use my coupon, right? And the thing is even if you did purchase, so like you get like $100 off thing in your lifetime. So one thing that you could do is you could buy Jigsaw through my coupon, right? And then you could purchase like a year's worth of live trading license with their discount that they're doing there. Something like that. How much did you pay for order flow? Are you just talking about the data? So the data, when all is said and done, I pay about $100 a month in fees and so forth for my trading setup. So I have to pay $50 a month for the live trading license for Jigsaw. And then it's like $30 for the data. And there's like a couple of other things that come through. And in the end, it ends up being about $50 that gets taken out of the brokerage account. So it ain't cheap. I'll admit that. And there's DX feed. They do order flow for stocks. That's about $100 a month just for that. So it can get pricey. There's the treasuries breaking out to the upside here. So the Federal Reserve, I think, wants the treasuries to move down, and they are not cooperating. A moment. I wonder. And also, like the volume that came through there kind of suggests there was a little something behind that. I am seeing a possible turn in the dollar here. Could be what's driving it. Could see if the dollar continues to move down. I think it's pretty likely that the treasuries will continue to move up. That's been the trend ever since the CPI. Yeah, they've pretty much got everything there on discount, and the discounts are valid until the 20th of November. Cool. Want to trade futures, NASDAQ? That's why I asked the question. Oh, okay, yeah. So if you're just getting started, I would, well, so first of all, there's like a bunch of different choices, right? What I do is pretty high end, or at least I have a pretty, I'm pretty particular about my setup, and I want the nicest things. You can probably trade futures for a lot less than that, right? So I have a video on my channel. I have a video on my channel. It's actually like probably the first video that you see if you're not subscribed yet. But it's like futures trading for beginners, and it was sponsored by Iron Beam Capital, and they have a nifty phone application and web application that lets you trade futures. That's probably like the easiest and cheapest way to get into futures trading, and their platform is actually quite good. I think that there are some real advantages to running all your software on your desktop yourself, especially when you're talking about like really crazy markets and everything, right? But Iron Beam is like a really great introduction. There's just so many different options and choices, right? But if you are going to trade futures, I do think that you want to be able to see the order flow. So, and the other issue is that, like, for instance, I do Jigsaw. Jigsaw is like $500 to buy the software, then $50 a month on top of that. Ninja Trader is, I think, like the full version of Ninja Trader is $1,000, right? So if you're starting out, I would be more concerned about like the startup costs than I would be the monthly costs, because the monthly costs are pretty low relative to the amount of money that you typically make in futures, unless you're trading micro treasury futures like myself. Trader Durga, how are you? Good morning. Well, I'm kind of looking at this like I wish I was long the treasury, but there's no way that I would have been like, oh yeah, it's going to go long. It's really extending in the 30-year as well, by the way. But it seems to be driven by the dollar. I'm trying to see if maybe there's like, there was news. Let's see here. Oh, Bank of Canada's Governor Macklem. Global inflation is too high and rapid increases in interest rates are raising the costs of debt servicing. That can't be it. China's president, she said some comments that maybe German economy nationalism is intended to secure energy supply. Oh, nationalization is intended to secure energy supply. Could be. Morning from Morocco. Hey, you gotta stick around for when Salim pops in. He's from that area. A long time viewer. Seeing gold shoot up here too. Well, and the S&P 500 turned around very quickly as well. Oh, Biden delivers marks and takes questions from Bali, Indonesia. No. This feels like it could be a news-driven move, but I'm not quite sure what's driving it, to be honest with you. I'm gonna search around here. No, I don't really see anything. Another thing is I'm not really aware of what. So one of the issues that we're going to have trading this week is that supply and demand, so like corporate issuance and that sort of thing, might be a more significant factor this morning. And so it's kind of difficult. We do have Brainerd speaking later today. Let me just come over here and check. What do we have anything big? Okay, so tomorrow we got PPI, Wednesday retail sales, Thursday Philly Fed, Friday existing home sales. So we got a decent amount of news coming out this week. We have 6-month and 3-month bill auctions. New York Fed inflation expectations at 9. Oh, thanks for the answer about that. But what does the free version of NinjaTrader bring? Okay, so the free version of NinjaTrader is freaking awesome, I have to say. Like, it's actually like really crazy what is available to you through the free version of NinjaTrader. But you cannot submit live orders with it. You can't submit live orders with the free version. So, I don't know. You got options. You can like, if you already have a platform that lets you execute futures and you just don't think you have very good charts and analysis for it, then you can use NinjaTrader just for that and execute on the other platform, for instance. But yeah, that's why I went to NinjaTrader brokerage for a while, because I wanted to be able to use I wanted to do some algorithmic trading. But I kind of came to the conclusion that my bots weren't quite there yet, that I really needed some like more advanced machine learning stuff onto it. And I haven't been able to put the time into that yet. I'm working on something else right now. So, you know, when I eventually decided I wanted to go to a different broker, so I left them. But that's kind of the bum deal with NinjaTrader is you have to use their brokerage, which is not like their support isn't the best, right? So kind of limits you in that respect. I didn't like that. So I wanted to try EdgeClear because they've always been really nice to me. Like I get contacted by the brokers all the time and we chat, but EdgeClear in particular was what really was like, well, we should have develop a relationship and stuff. I wish that futures brokers could do more. I think that you know, I don't think that we realize, at least I never really realized this until much later on, but futures occupy a specifically unique place because in many respects they are like pure trading. Like it is like pure trading futures, right? But they're not considered securities. They're not securities. They're commodities. So, yeah. That means that like all of the rules for futures are different. And that's part of why the futures brokers and the FCMs and everything are treated differently than your regular stockbroker, right? And one of the things that your regular stockbroker can do is they can kind of have like soft dollar arrangements and things like that. So that like if you trade with or invest with Fidelity, for instance, you get access to all of this research. They have lots of research that you can use on their website, for instance, right? There's all sorts of other goodies that your broker can potentially supply for you. Your broker in futures isn't allowed to do that. You're not allowed to have introducing brokers either in the United States, at least in the United States, right? So like what your futures broker can actually provide you is pretty limited. It's just like the support and your commissions, and like that's it. That's it. I think it would be great if they could give you like access to a news squawk, those sorts of things. Like that would, then we'd see so much more specialization and features coming from the brokers, but we're not allowed to do that, right? and I would probably be able to work better with them to be able to get goodies for the audience, you know, deals where you could get like a month off your commissions or things like that. They're not really allowed to do those kinds of partnerships with me. Well, they might be able, they can do a coupon code, I guess, if it's like available to everybody, but I don't think that, like, they certainly can't do like an affiliate program, for instance. That's also why you see a lot of like, man, the software that's available to you for a futures broker is like one of the big factors behind like which futures broker you choose. For instance, if you want to use NinjaTrader, it's probably why you go to NinjaTrader Clearing, right? Okay, Biden is speaking. He's talking about Taiwan. Anyways, it's an interesting thing. Anyway, the platform usually is like separate from the broker still because of things like that. So, and what's happening a lot of the time is you get a software developer already exists and they'll team up with the broker. Like practically every broker now has their own platform that they kind of highlight, but they didn't actually build. Is Tradeovate a good platform for futures? Is it? Okay, so Tradeovate has been. I'm not too sure about what it's like lately, but the deal with Tradeovate is they got bought out by NinjaTrader. So I don't know where that's going. I don't know if it's just they bought them out and everything at Tradeovate just continues on the way that they were. I never felt that Tradeovate's charts and platform and everything was very good. The unique thing about Tradeovate was that they had this deal where you could pay $100 and then you wouldn't have any brokerage commissions. So you'd still have to pay the exchange commissions, but not the brokerage commissions, right? So it's because it's like an all-in-one sort of a thing. So if you were trading a lot of round terms a month, then Tradeovate made a lot of sense. But I don't think that most people are. I don't think that most people are, you know, if you take more than 100, if you're trading micro treasury or if you're trading micro ES futures, for instance, you'd have to be taking more than like 100 trades a month to make it worth it, right? So like in terms of platforms, my personal favorites, right, or the ones that I would look at are going to be like NinjaTrader and Iron Beam are the two kind of like futures specific one. If you really want to go high end, you want to do Trading Technologies. Trading Technologies is like the leader in the space, but it's too expensive for most people. But if you're really, really serious, that's the way that you want to go. Like if you're an institute, if you're going to be like doing futures as part of some institutional sort of a thing, like I'm hoping at some point. Oh, you're a college student? Well, there you go. Probably Trading Technologies, not for you, but at some point, I would maybe want to get into running a CTA fund or something like that. And at that point, probably we'll need to use Trading Technology, right? So anyways, Iron Beam is a really good beginner's one. And then there's a couple of other brokers that are more like, the highlight is more the broker itself. So that would be like Edge Clear. That's who I use right now. They're really good. And another good one that we've been friends with is Optimus Futures. Optimus is pretty good too. They're pretty nice. But for you, I would try you. So I have a video that video I was talking about that's like futures trading for beginners here on this channel. Go and watch that channel because you can go and set up a demo with their platform literally in like 10 seconds. So you could go and try them and see what you think of that platform. I like this kind of art thing going on in the background. Excel is the greatest front end. Just pair it with Python/R and get data via CQ. Yeah, actually, the Rhythmic has a plugin for Excel too, doesn't it? I think it does. I was looking at that. But when I was messing around with Refinitiv Icon, you know, I was messing around with the functionalities that they have for Excel. Oh, you know what? That reminds me. I installed their plugins to Excel, and now that I'm not using that anymore, I should probably uninstall them, because anytime that I come in and try and load, run Excel, it seems really slow. And maybe it has to do with the add-ins that I added. Let's see here. Add-ins. Manage Excel add-ins, go. Excel uninstall add-ins. Microsoft support, add or remove. File options, add-ins, select the checkbox next to the add-in you want to activate and click OK. Oh, to activate, to install, to inactivate, to remove. Oh, it says that it should be on my program, since that's weird. Saying that it should be in here. No idea, but CQG native support for Excel's RTH function as well. Can volume profile replace the DOM? I don't believe it can. A volume profile is really interesting, and I think that watching the volume profile as it develops is kind of a key skill here. It's kind of more of the higher time frame skill, but I think it's really important one to watch, because you should be able to, if we're doing well, we can predict where the profile is going to develop. Now, right now, it's not giving me a whole lot of clues, but we'll get these points where we say, oh, okay, it's going to get stuck there for a while. And then that should end up becoming the point of control for that distribution or whatever the deal is, right? So I think it's an important factor. But there are things that you can't see in the volume profile, because when I'm just watching this, I'm coming in and I'm looking at, okay, what are the market orders? What are the limit orders that are being added, and what are the limit orders being canceled? And I'm looking at the balance between those things. And so a volume profile is not very good at telling me that we're seeing some sort of a flow come in, right? That's really what that comes down to. Well, I like to see some studies regarding volume profile first. So yeah, and here's the thing is that when we talk about, if you go and you search for volume profile, right, the majority of the stuff that you're going to see is going to be based on Dalton's work. Basically what happened is Dalton had like this market profile thing. It was based on time spent at a location, and they just went and applied all of those concepts back to the volume profile instead of their TPO profile that they had, right? And hey, NASDAQ killer, we had somebody in here earlier that said they were from Morocco. I was like, you two should get together. Who was it? I don't remember now. I don't see them. They said hi from Morocco. I was like, oh yeah, Daily Vibes. Daily Vibes said he was from Morocco. Oh, well, Kyle, are you been the one that's been getting all of the spam before I'm even able to click? Okay, so anyways, and so a lot of these setups with volume profile are like, if the previous day's point of control is here relative to where we open, then you take this trade. Or if we're at a key, like if there's a step in the profile or you're at the middle of the profile, then you do X thing, right? And that is, you know, is that like a profitable strategy? Well, I've never seen any data on that. Okay, but the volume profile, you do tend to get a profile. You do tend to get, well, the treasury is being awfully, oh my gosh, ever since I did the latest update to the pen here, it's been giving me trouble. Okay, this distribution that we got right here, oh, it's not doing it. It's not doing it. Well, you can see there on the ES, we have a distribution going on in the volume profile, okay? Under normal statistics, seeing like a normal profile like that wouldn't really make sense. So there is something going on. Why do we get those distributions? And I think the researchers have a really good explanation in the whole liquidity hole to explain why the distribution happens. So from that perspective, there should be some information about the market useful information that's statistically backed, that we should be able to tease out of the volume profile. Is just what I see most people doing with volume profile is not backed. And so I can't say. Whenever I've tried the few that I've tried back testing, like I tried back testing a step in the profile, there was some interesting statistical behavior about it, but ultimately it wasn't profitable. So what do you do with that? And it needs to be in the right situation, maybe. Maybe. I'm not seeing here. I wonder if just find Refinitiv in here and maybe that can... Ah, there it is right there. Microsoft Office 64-bit. Let's see. What? You didn't do anything? No, it was actually... Oh. No, I had the bot that came in at the very beginning. I was the one that fixed that. I think it's Uzi, like with the ones where it's like they get the spam before I can even click on it. I think that's usually Uzi. But he's taking a little bit of a break today, I guess, because his data was down. Do you share your theory on why the so-called liquidity holes form? Okay, hold on a second. You know what? I need some water. I'm gonna uninstall this and I'm gonna refill my water, okay? Stay hydrated and remember, don't be poor. Has been uninstalled. Okay. Oh, hopefully that helps that. Okay, so we gotta go in here to my trove of documents. My trove of documents. Where's my trove? Reading, learning stuff. I have so much stuff. Scholarly articles. Then I have the best scholarly articles. This Walrasian auction. Okay, so the study is from Walrus's auctioneer to continuous time double auctions, a general dynamic theory of supply and demand, from Jean-Philippe Bouchot and John I think it's John Donnier, right? Anyways, these two guys are the best. Really? Okay. In standard Walrasian auctions, the price of a good is defined as the point where the supply and demand curves intersect. Since both curves are generally regular, the response to small perturbations is linearly small. However, a crucial ingredient is absent of the theory, namely transactions themselves. What happens after they occur? To answer the question, we develop a dynamic theory for supply and demand based on agents with heterogeneous beliefs. When the inter-auction time is infinitely long, the Walrasian mechanism is discovered. When transactions are allowed to happen in continuous time, a peculiar property emerges. Close to the price, supply and demand vanish quadratically, which we empirically confirm on the Bitcoin. This explains why price impact in financial markets is universally observed to behave as the square root of the excess volume. The consequences are important. They imply that the very fact of clearing the market makes prices hypersensitive to small fluctuations. Okay? So, when you do a Walrasian auction, what happens is you say, okay, you can only trade limit orders. Everybody put your limit orders in, and then we will match those limit orders at the end of 5 minutes. And so every 5 minutes you do that auction. Okay. So there will be a certain number of people that want to buy and a certain number of people that want to sell. And what happens post auction is that the people get matched up. So then the next auction, right, there's going to be less people looking to buy or sell in that area where everybody else had just gotten filled. And so you end up with this area that kind of ends up being a vacuum, where it's like any kind of trade in that area will like cause it to move, but then it's like really hard for it, like a real trend to develop and it to actually like break out, right? And this leads to the square root law, which is, right, I would draw it up here, but my pen is broken. Let's try restarting that. Let's try killing it. It might have been that it didn't like the way I restarted my computer or something. Where is my epic pen? I think there was another picture. Oh yeah, here you go. Here's your picture. So this is like the latent liquidity that you get, and you get this curve where the latent liquidity in the very middle is low, right? The whole idea that liquidity didn't have time to catch up after a sudden move, and nowadays, no, it totally does happen though. This explains why, right? So they're saying, man, I wish I could draw here. That's mathematical financial engineering. It is. So they're saying this is the buys, This is the sells, and then these guys get matched, and so then next auction it's like this, right? That's the thing that they're getting, right? So when you have a big move, for instance, right? It's going to move, right? And there's going to be bids behind it, right? But what you're going to find happens is like it'll go up and then it'll come back, and like how much does it take for it to come back? And it will be like only 200, 500 trade, and it'll trade all the way back, right? So what does that mean? There are robots out there that are always putting lots out there, but there's not like the latent liquidity. So not the resting liquidity, but the latent liquidity overall. The number of people that are actually like, oh yeah, I really want to trade at that spot. There's not very many of them because they already traded it essentially. And so that's why it's able to come back so easily. It's a liquidity hole. But this is why, in my opinion, that you have to watch the DOM. You can't just do it with the volume profile, because in the volume profile, you'll see the end result. You'll see the end result is that they got stuck at 0.5 for a while, right? But you can't see it as it's happening and predict that it's going to happen. But you can from the DOM here, because you'll be able to see that, oh, there's not very many limit orders placed there. And then they trade through those limit orders, and then that's it. They don't keep stacking. They just keep moving on. Right? That's what you're seeing. That's where you're seeing this empirical behavior. Is essentially when a bunch of people trade in one location, it reduces the latent liquidity in that location, and price tends to come back to equilibrium where supply and demand are basically at their weakest. So really what this pushes back against is one of the key, what would we say it? Really what this study does is it hits at one of the key theories behind what a lot of volume traders try and trade. So basically it disproves one of the primary assumptions of auction theory, because auction theory says that when a lot of trade happens in one location, that means a lot of interest and agreement in price. And that makes zero sense, because you don't trade something if you think that the price is fair. You think the price is fair, you don't put your order in there. No, you put your price in because you don't like the current price, right? Or as we found through many other studies, a lot of these people put their orders in because they just have to sell it, and they don't really care what price it is. They're just taking whatever the market prices are, and they're executing based on some schedule or VWAP or whatever the thing is. But they're going to buy a number of contracts that day, regardless of where it's at, right? So the idea that a bump in the profile represents agreement, just from a logical standpoint, doesn't make any sense. And that's kind of always been one of the key arguments in auction theory, and something that they like debated and stuff. Then this study comes along, and what do we learn? Oh, those spots aren't forming because of agreement. They're simply forming because a lot of trade happened there, and it creates the liquidity hole, right? Now you're kind of treated a little bit different, because now if I see one of those holes form, that doesn't make me say, oh yeah, that must mean this is a good price. Doesn't mean that at all. It just means that you're probably not going to move for a little bit, because they're going to be stuck until the liquidity hole heals. So wait 45 minutes. And if you have a reason to think that it's going to go up, that reason that you think it's going to go up probably still holds 45 minutes from now. So just, time your trade, right? So much more helpful. Yeah. Well, okay. There is another way of stating the same thing, though, Kyle. So I don't think that auction market theory states that high volume prices means agreement, though that's market profile thing. Auction market theory states that the primary function of markets is to facilitate trade volume is a result of this. So prices with high volume are prices where trade was facilitated the most. Well, okay, that might be true that prices with high volume are prices where trade was facilitated most. But people that subscribe to that theory generally will think, okay, well, if there's a really big offer up there somewhere, that's somebody that wants to trade, and price is going to move up into that person that wants to trade. That's why they say that sort of thing, right? And what you have to realize is that seeing a lot of trade facilitated in one place could just be a coincidence. In fact, most of the time, it is just a coincidence that two big guys intersected with each other there. Except for in the case when they get caused by like fast market action, right? It's so confusing to you now. You don't have to know. Well, yeah, because what we're talking about is something super advanced, right? Basically, what I'm talking about is like there was a theory that a lot of traders were trading on for almost 10, 20 years. And then this study came out and basically contradicted what they were saying. Basically, what we're saying is that the reality of the market is such that it took us 30 years to figure out this really, really key part of the market, essentially. Because when did this come out? This was like 2015, right? So this is relatively new. Yeah. But this comes back to the larger thing that I've always been trying to say about the market is it's incorrect to come in and look at the market doing something and then state that that must be reflective of something going on in the fundamentals, essentially, right? That there's something about that. A lot of trade happened in that location. That must mean that they think that that is a good price based on all currently available market information, right? Now you're applying technical analysis. This is flawed. No, it was purely random chance that that is where supply and demand kind of intersected, and it will rest in the place where now the supply and demand are at their weakest. So then you get into this place where you go lower, there's more people that want to buy it. You go higher, there's more people that want to sell it. And so it just gets stuck there. And then because they get stuck there, that ends up having more volume trade at it, because having it sit there for a really long time ends up being the most important thing to how much volume traded there. That's why you get the volume profile distributions. That was the whole point. That was the whole point of that, is that the liquidity holes is why the volume distributions happen, right? So point one, volume distributions happen because of this liquidity hole phenomenon, right? Point number one. Point number two, they can have absolutely no fundamental information behind them. They can be just complete random chance, right? And number three, those holes take a certain amount of time to fill in. So you might be able to use that to better time your trades. Yeah. I will just trade with dinosaur channels. Can you show the jigsaw setup for the ES to show you in numerous? What do you mean by in numerous rounds? Or are you talking about like what would I for a multi-lot setup? Because I don't really have a good setup for that, to be honest with you. We do have these things for like strategy manager, for instance. You can come in here and you can set a strategy. So here's one where I'll have one target at 10 ticks and the other targets at 24 and beyond. And then my stop will be at 12 ticks. Although these are probably too tight. Now, I haven't traded this in a while, so those numbers are probably too tight for today's ES setup, right? But I usually manage it by hand, though, to be honest with you, because I come in here to my settings in Jigsaw. By the way, I have a video after the stream. My video where I go through my whole setup is coming out. So it shows you the settings that I'm using in Jigsaw and stuff like that. But it doesn't really show you how I try and manage multiple lots. The truth is that the managing multiple lots thing is still a work in progress, I think. So you come into appearance and you have these two settings, show P&L and include closed P&L. I don't have that one set because I haven't been actively trading this instrument. But so then when I take a trade, so let's do it here in the treasury, shall we? Let me make sure that I'm on the correct, well, I'm on the serious sim account. We'll put it on the experimental sim account, right? So I will take a trade. So when I buy in there, you see these numbers show up over here in my order column. That shows me how much money I'm making or losing at a specific price. Okay, so we'll take 2 lots in there. And hopefully it will pop back up to 06 and we'll get a fill there, so that you can see the other feature. But what should happen is it will include that I already took 1 tick of profit. And so my break-even point will move from 05 half to 050, essentially, because I've already made a little bit of money, right? And so that's how I try and manage it, is I'll take multiple contracts and I might even take a spot over and over and over again. And then I have to use this column to determine like where my risk is. What's the point at which I've lost too much? And if it's coming back, I might like puke a little bit of it and then try and, see it came back, buy a little bit more. Now you're talking about risky stuff, right? But if you're trading multiple lots, that's the sort of thing that you can do. Okay, so I took another contract and I moved down 2 ticks. So I don't necessarily like that, right? Yeah, you're making a market. What I'm doing here though is like I don't do this on my live account because there's a lot of risk involved in it, right? Like I would have to be willing to risk a few $1,000s to really realistically do this, right? So that right there, I don't like that. The way that it's ticked down on me. Have you established how big your market is beforehand? Well, so I have some metrics over here that kind of tell me how much activity is in the market so that I can kind of determine how many contracts I might want to take. But when I do this in ZN, I never want to be more than 5 contracts. So I took 3. And I'm already not liking it and thinking maybe I'll just bail. Check your question. So if people want to buy below the hole and want to sell above, and everyone that wanted to trade in the hole already did, we can assume that holes can be a point of reference, i.e. volatility targets can use the hole price for reference. So when you get a hole, so like if it's the 10-year treasury and you get a hole, what you'll probably see is it just rotate around that price for forever. So the volatility would be 3 ticks, basically. 3 to 5 ticks when that happens in the 10-year treasury. So in a really thick instrument, that hole can be really, really tight. You know what I mean? Can you link the study? I don't have a link for it. You could search for it though, right? You search, it'll pop up on AXRV, I think, or archive, ARXIV. Okay, so there's some trade happening there at 03 half. So what I think we have here is a distribution that goes between 04 and 06. So let's see. Show you in numerous rounds on the price. Well, Juan, is the real question, like, how many ticks should my target and stops be? Is that what you're asking? Because you're saying numerous rounds. It sounds like you're asking about how I manage multiple lots. We can basically market make the whole to oblivion. Yeah, exactly. Like when you see the whole form, basically what that's saying is, if I can get filled here on the buy, I should do it. And if I can get filled here on the offer, I should do it. That's what it means, right? It's a place where you're a little bit safer as a market maker. Now, I don't know if the overall, you know what, by the way, I want to here. The question is the risk worth it, right? Because the issue that you're going to have is that, you know, if there's a breakout, if there's a news move, you're going to have a bunch of contracts and you can get screwed, right? And right now, 658. Yeah, right now what I'm doing right now is actually probably a little dangerous, to be honest with you, because it's already been a long time since this hole initially formed. So they may be ready to move. So I got to be careful from that respect. It did come up there, but I didn't get my fills at L5 half, right? If I was a little bit more keyed in, maybe I would have taken some off at L5. Reduced some of my sizes at the break-even point. You'd be surprised how easy it is to make money this way. It's just basically an edge no one knows about. Well, no, I don't think it's that simple, Lucas. Because so if I'm doing this here in the treasury, for instance, I mean, this is a pretty big distribution that we're getting, and you know, we've had a very illiquid market as of late, right? But the issue with it is the chances of me actually getting filled are relatively low. Like, for this to really work out long term, you really have to get a good spot in the queue. Like that's really the problem, right? Is that me sitting here, like one lot went through at 05 half. So if I had been at the begin, if I was always at the front of the queues, then I would probably already have some profit baked in, right? But as it stands right now, I'm just kind of sitting here like waiting for it. And then the issue is that if you do get the fill, that might be the next set of flows coming in that's going to push against you, right? So it's the whole toxic order flow. I don't even call it toxic order flow, but just, you know, there's that whole give and take between the advantage of being in the limit queue, but then if you get filled, that might mean that means there's flow going against you, right? So I don't think that it's like nobody knows it. I think it's that the robots have already taken so much advantage of this thing that it doesn't stick out to retail traders as like a really serious way to make money, because I'm a little bit skeptical about how well you could actually do here trading doing just that. Okay, but when you understand that behavior of the market, it helps so much for the other kind of trading, because the kind of thing where I think that a retail trader has the most advantage is, you know, something, you know what the flows are likely to be that day, or you have a piece of news or something like that. And then if you know where like the holes have been and what the liquidity conditions are and everything else like that, you can really use that to your advantage to time your trades and pick better prices and things like that, right? Is this a liquidity hole for you in your picture? What's the picture? No, that's not what it means. No, because so the place where you have the liquidity hole is likely to become the point of control, right? So look at our current spot, right? Where I got in, I got in at the high point of it, so I didn't do this very well. I would like to be in at like 0.4 half, right? See the distribution? The center of the hole is likely to become the most traded price because it sits there for so long. So it's kind of paradoxical. It's like supply and demand are at their minimum, but because of that, it ends up trading the most volume in that location. Make sense? It's just, it trades that volume real slowly. Oh, are you saying how do I configure things so that I'm not showing every quarter point, Juan? The way that you do that, you have to have the latest version of Jigsaw. So I think that you have to have the beta version of Jigsaw, but you can go to the website and download it right now. And then when you're setting your instrument up, you'll get a screen that looks like this, right? And there's a new feature called tick multiplier. So that will like aggregate every X ticks together into one. So what I've done is I've aggregated them by 4 so that instead of it showing quarters, it shows me in full points. And then it makes it so much easier to track the S&P 500. That's how you do that. Tick multiplier. It's a new feature that we got available to us like last week or the week before that. So no, so that the Kyle, that area that you're highlighting though in that picture, you know, well, in this particular case, what I think you're seeing, well, that looks like that is like a weekly profile sort of a thing, isn't it? That's like, yeah, that looks like a weekly volume profile. But what that's showing basically is that there was a strong move through that location because of informed trading, and so they just slipped right through it, right? They just slipped right through it. So if I get a spot like that, let's just say here, for instance, that we moved back up, right? Let's say that we broke out, and then you're gonna get like a low spot right here, and then like another one right here. Actually, it would be close. It'd probably be more likely at 0.8. So let's try it at 0.8, right? This is our possible future profile. Okay. So if it goes back up through here, then the thing that we have to keep in mind is that because they pushed through this location so quickly, that the latent liquidity behind it is probably not very strong. So if we start to see selling come back in, or these guys decide to take profits, it probably will come back through that location very quickly. But if it's been more than 45 minutes, then that doesn't apply anymore because the liquidity is healed, right? So yeah, there's some nuance to it, right? You can't just say, oh, well, because there was a big spot that stuck out in the profile, that means X, right? But instead, what we're saying is, here's a behavior. When that behavior happens, this is what you'll see. That doesn't mean that every time that you see that, it's that behavior, right? Which you'll just come across over and over and over again. It's like, are there patterns in the market? Yes, there are patterns. It's just, they're not predictive patterns. It's the pattern is showing you that thing that already happened. And the pattern doesn't always indicate that condition. But if that condition does happen, you will always see that pattern. You haven't answered my question about how to determine how big your market is. I feel like you're using too vague of a terminology for me to understand what the real question is. I think you're maybe asking, like, if I'm doing this, how many ticks should I be going for? Is I think kind of the gist of it, right? And in that respect, I'm just kind of seeing which prices do I see this behavior in. Yeah, in terms of how wide. So it's always going to be different. You can certainly look at what the liquidity is. So the higher the liquidity is, probably the more narrow that range is going to be, right? Right now, with it at thousands in the treasuries, you're usually able to get about 5 ticks, is what I've found. But what I'm going to do, instead of sitting down and saying, okay, like, here is the point, now I take the trade, 2 ticks, 2 ticks. No, I don't do it that way. What I do is I see, here's the hole. Okay, I need to watch it as it trades. They're able to trade across this whole area. You see this? They traded across this whole area here on practically nothing. So if there is a liquidity hole, it's like all the way to here, right? So we didn't realize that when we took that, but we were just kind of taking it as an example, right? Probably we would rather have our position centered around 03, huh? That would be a better setup. How do you determine if you have been adversely selected against if it goes beyond that liquidity hole? I'm not sure I know. Like, really, the kind of the question is, okay, at what point do I puke? I mean, I usually base it just on how much money I'm willing to risk that day. So I probably don't have a good way of determining that. Wait, are you saying to absorb it? No. I'm just saying in the latest action, you will have 1,000 lots per price, right? In the 10-year. And I'm just saying that with it around 1,000, what I found is that it's going to be around 5 ticks, maybe 5 to 8, but this is probably too far, right? This does not look like, and that's the other thing is that, Lucas, what would tell me something that like I'm being adversely selected against, I guess, would be if I started to see auto-correlated order flow in the other direction, right? If I'm starting to look at my cumulative delta and I see cumulative delta and all 3 instruments all are consistently going down, then that's a pretty bad sign, right? Someone else had better information. I didn't really take a very good price when I started it because I was like, oh, let's do an example here. And I just said, I'm just going to use the prices that I have. I don't think I did enough analysis of the profile here to really get a good one, right? But yeah, like the big thing that you want to be worried about is when you start to see the market, there's a real imbalance in the market orders coming against me. So is that what we're seeing right now, though? So if I come back to the charts, here's the cumulative delta, right? It's kind of fuzzy. It's kind of fuzzy. So I don't think we can say that we're getting that right now at the moment. So I'm not panicking yet. I'm not panicking yet. It could turn that way, though. That's why I'm saying that, like, to me, it's like what we're doing is kind of risky, because by the time I realize that like this is a bad trade, you've like lost a lot, and you probably lose more when you lose than when you win. How did you become so good at statistics? I don't really feel like I am good at statistics, though. Kyle, let me see this picture here, Kyle. Is this a hole? Is that Euro FX futures? Okay, so this spot right here, if these are 30-minute bars, this area right here, 100%. That's totally what you're looking for. Is look, it goes back and forth across that area a bunch of times. It can't seem to get out of it, right? And then what ends up happening? Tons of volume trades there. That's totally it. Yeah. And I think that if these are 30-minute bars, then that's exactly what you want to see. Is like you're going to get a move up, right? And then it will kind of go sideways for 45 minutes, and then you get another move up. That's what you want. And what's happening is somebody is executing a meta order. They push it and force that distribution to happen. Then they trade a ton of volume in that distribution, and then when that distribution heals, they're going to push it up again to create another distribution somewhere where they can get a bunch of other volume out there, and that ended up being that one. Yeah, that's what you're seeing. Well, you know a lot about distributions and can understand things at a first glance. Well, so the stuff that I know about distributions, I learned from reading Nassim Taleb's book. And understanding these things at first glance is just like, I don't think that it has been first glance. I think that it's taken me like 5 years to figure this stuff out. Right? So here, how do I put this? The skill that I have that I'm really good at is I'm able to take really different pieces of information that seem really far apart and being able to explain how they're related to each other, right? That's the thing that I'm able to pick up on that a normal person doesn't. Okay, so it's an ADHD attribute. Okay, so an ADHD person sees all of the information and sees all of the connections, and it's just like overwhelming because they're there and you just can't help but notice them. Whereas most people's minds, you might see the connection there, but your mind just says, well, that's not the thing that I'm focused on. That's not important. And so your brain just discards it and doesn't even see it. It doesn't bring it to your conscious mind, right? That's the thing that I'm special at, right? I wouldn't call it a genius thing, but it's kind of like when you look at a data set, if you're neurotypical, when a neurotypical person looks at a data set, they go and they say, okay, this is what I'm looking for. These are the important things, right? Whereas an ADHD person, they have to like brute force it. They have to say, here's every little thing, and now I have to look at every single one of those and discard the ones that are irrelevant pieces of information. I have to do it all manually, right? So it's not, in many respects, it's a disadvantage, right? Because you notice I'll be coming on here like every little move seems like I'm looking at, and I'm overanalyzing things, and I'm picking up on stuff that's not really actually there, right? How hyperactive are you? Not very much anymore. I've always been more of the inattentive type. So when I run out of dopamine, I don't get hyperactive. You know, I get quiet. Right? So anyways, what I've been able to do is I've been able to look at, okay, here's all this research. Okay. And banks have been using this stuff for their own execution and for their own trading. But everybody just kind of assumed that, oh, well, okay, that's for an institution. That's for when you're executing a really, really huge meta order. That's not relevant to retail traders. And so they all discarded it. And what I'm doing is I'm coming in and I'm saying, well, but look, the behaviors are still there. You can use it to your advantage if you're a retail trader, right? Because it's an empirically proven market behavior, right? That's where I'm special about it, right? But this, like, especially stuff about statistics, I wish I had taken a statistics course. I've been trying to get into more advanced kind of statistics, like doing a what do we call this? Hidden Markov models. Like, I've read stuff about hidden Markov models several times, and I still don't completely understand how those things work. It is such a weird It's almost like magic to me. Like I see the formulas, like I have tutorials and stuff, so I think I could like sit here and program it, but like I really don't understand why it works. I really don't. But I take issue with the "you're good at statistics" thing specifically, because I'm constantly coming in and saying like, here's the mistake that we make with statistics, and this is why so many retail traders fall into this trap. And I fell into the same traps when I was doing my own stuff, right? It was just that I had been told enough to know like what were like the acceptable levels. This is like, you want to trade like over 5 years, that sort of a thing. So I just always back tested more data than other people, right? But I didn't figure this stuff out on my own. It took me a long time. It took me a long time to figure it out. That's why I focus on it so much, because I'm like, this is the thing that everybody gets wrong at the beginning, and it's just like, we don't want to listen. We just want to see the results, and you don't get them, and you know, it's that sort of thing. Yeah, major in statistics. I think that if the YouTube channel like started doing really, really well, and you know, it was enough that it more than like let's say that I was making like double or quadruple the amount of money just from the YouTube channel that I'm making from my day job, right? I think that what I would do is, instead of spending all of the time on the YouTube channel at that point and just like totally focusing in on that, I think I would take the time that I would normally be working and do school. I think I would go back and get a PhD. I think that that's what I would supposed to do if that's what happens, and learn those statistics. I have a statistic book that I'm trying to go through, but it's super hard. But I kind of put that one on hold. A PhD in like mathematical finance of some sort. A PhD so that I could go and do research studies about market microstructure. Yeah. Well, this doesn't look to be going too well. I'm still hopeful that it's going to come back up for us, but I'm still not seeing like very strong flows, like market orders wise. If I was really willing to be stupid, we could take a couple more contracts and try and flatten it out. Is it better to read some book about the DOM or watch it? Well, I think that, so the DOM is an interesting thing, because I think that there's a little bit of information about how the market works that you kind of have to have at the very beginning to really even understand what you're looking at. I think that the No BS day trading course does a really good job at doing that. But I also have my own beginning course that I think gives you really key pieces of information that you should be able to understand, right? And then you really do have to watch it for a long time. It's just something that's like, it's not intuitive. It's not the way that our brains were like evolved to work, right? The thing with market microstructure is that this stuff is really obscure stuff. You would need the exchange to disclose info that they share with high frequency trading firms with billions behind them. Well, that is true that some of the best studies that we have came from proprietary data sets that they got from, like, you know, a Goldman Sachs or JP Morgan. That's true. But I tell you, for instance, if I was a PhD right now, okay, or, and I was doing my own research study, here's the research study that I would do. You can determine whether an order is a market order or a stop order with market by order data. So is there some aberration we can find from studying stop orders? Do stop orders have the same impact on markets? Do stop orders have certain times or situations where they're more likely to come out, etc., etc., etc.? That is a price, when there's more market orders coming out on a move, does that make the move more likely to continue? Or that's the sort of thing that I would want to do. Yeah, you really can separate those. So the way that you do it is that in market by order data, there was a thread about this on Futures.io, and I kind of pieced this together. Okay, because it's supposed to be a secret, but I'm pretty sure I understand how it works. I've never used the market by order data, so I haven't programmed this, but this is my understanding of it. Okay, every time that an order is changed, you will get an update in market by order data, right? So if I have an order that's like at 02 and I decide to move it up, then what I will see is an update. It will say, okay, the lot with this ID its price has been changed from 02 to 02 half, right? So if you come in and you see an order that is an execution, but it was an update instead of a new order, then that means that it was a stop. That means that it was a stop and it was converted into a market order. Because if it was just a market order, then it would just be a new order market, right? So if it's an updated order, but it's market, then you know that it was a stop because it was converted. Yep. You totally get it, Kyle. You totally get it. And that is what Bookmap is doing, because Bookmap has a little data series you can look at that if you pay like $100 a month extra for or whatever, that's how they're doing it to show when there are stops, right? Let's make money off this. Well, that's the whole thing, is I don't know if you actually can make money off of it. It may be the case, and I actually strongly suspect that stop orders end up being not that special. that they are actually, I think that it may be the case that stop orders are actually pretty randomly distributed, that they're not more likely to come out at a certain spot, and that they don't have any different of an impact from any other kind of an order, right? But I think that would still be a significant discovery, right? Because so many, a lot of the most popular theories and approaches to retail trading out there are based on retail traders saying that it's all about them trying to trigger the stops and stuff like that, right? So if you can prove that there's just that the stops are just as noisy as anything else, that would kind of put a kibosh on that whole set of ideas, wouldn't it? I think stop orders are mainly retail. Big funds don't stop, they reposition themselves. Yeah, I think that when a big trader stops out, it would not show as stop orders. It would just show as market orders, because they have quote unquote stops, but they're like synthetic, right? Because what'll happen is when they stop out, what they don't want to have happen is a big 2,500 lot pop in, right? They're going to send it into their algo that splits the lots up and all that stuff. So you're probably right that most of those stop orders, the vast majority of them, are indeed retail traders and small market makers. But the important thing is, I don't think that stop orders have any different impact from any regular market order, and they are probably randomly distributed. And the market reaction to them is probably the same, in that the market makers absorb it in a randomly diffused pattern so that you get some amount of movement that allows the market maker to make money. There you go. There he is. There he is. There's the spammer. Who's gonna get him? You gonna beat me? You gonna be? Oh, you got him. You got him. Good job. But anyways, so I don't actually think that there's edge in it, but it's an area of research that is like just screaming for somebody to go and do, right? And I can't believe that there hasn't been a study about it yet. Do you think big traders are painting the bid and ask in bonds as well? What's the likelihood? I think that the market makers have a model similar to what we do, wherein they try and determine what the flows are going to be for that day and maybe adjust their bids and offers based on that to allow their bids to be a little bit more soft in one direction, so that if they think that it's going to go up, they kind of will let those bids be a little bit weaker so that it will try and coerce retail traders into thinking that it's trending down and getting into it. Yeah, I think that something like that probably does happen, because I've always found that, like, when I'm doing that sort of a thing, like if I really think that it's going to continue going up, like right now is probably a good situation where I think that if we had really thought about this a little bit better, we could have executed this trade better, right? Is like, wait for a move to go against you first before getting in. The stop orders are randomly distributed, but the market orders maybe aren't. We can separate real moves from retail moves just comparing the proportion of those. No, because, you know, like, let's say that every retail trader, let's just make this like a crazy assumption. Every retail trader enters with a market order and exits with a stop order. Every stop order is an unprofitable exit, and every limit order exit is a profitable exit. I mean, that's the way that retail traders tend to behave, right? So you would also have to be able to, to be able to do what you're talking about, because I think I know where you're going, you would have to be able to tell if that market order was associated with increasing or decreasing a position, right? Then maybe you could figure that out. So you can send a message to speculatorseth@protonmail.com. I think that the email is listed on the about page of the YouTube channel here. Okay. Well, there's another 2 ticks down. I am seeing some more extreme flows in the 5 years, so I think that it's time for me to bail on that unprofitable trade. And we'll keep an eye on it. I think that it made the case really good, didn't it? Actually, in the end, it was maybe actually better that it was unprofitable, anyways, because I think that you saw enough of the behavior that I was talking about to understand how market making it can be profitable, but also kind of the issue with it that means that it can kind of be a risky thing to play as a retail trader, right? So, but at the same time, I do kind of wish that, like, I had thought it through a little bit better, because I just thought, oh, I'm just going to take one lot and come in and take it off here and then it'll be done. And then it turned into a bigger thing. So Plus, I also hadn't kept track of how long it had been. So there was a bit of a distribution around 20, though, wasn't there? Like, there's a distribution around 20 earlier in the day, and when they came back, they decided to distribute around that spot again. In oil, for example, there are importers versus exporters that have limit prices for their hedges. They act like retail in a sense that they are triggered by price. Oh. Interesting. You know, anything where you can prove that like a specific price does a certain thing could be potentially valuable, right? I would have waited one tick more to see if S1 pivot had held. Yeah. Well, even like looking at it, like really, if I'm seeing a distribution, I want my average position to be the lower half of that distribution. So just on the way going through, and the middle of the distribution was 04 half, and my position ended up being 04 half, meant that it wasn't the best execution, right? So yes, I should have waited. But the other thing is that I didn't think about, and this is me being my typical ADHD self, was seeing that the last big move up had been 45 minutes earlier. So that was a bad time to try and play the mean reversion game. Let me see if you got my email. No, I don't see anything yet. Speculator Seth at protonmail.com. Here, I'll put it like a copy and paste it, or I'll type it. Yeah, that's why I think the lower end of a distribution holds for a few times before it breaks. Market makers manage their position until their average price ended in the lower half. So then when it goes down, they add. Yeah. Well, and I think one of the things that kind of might make like this particular move, I don't know, we did decline by about 5K contracts. So that might have been a meta order coming in against us, but it might also have been people puking that had been in that distribution there. Now that we're down here, I think I could see us maybe being able to pull something about around 112. The question is, do I want to do it short or long? What do you think? I actually think that it might make sense to do it short. So one of the things I like to do is come in and be like, okay, if I think it's going to go, I'll take at least one market order so I don't miss it. Let's try this. This is a little bit kind of adding on to it, so I think that I'm not going to hit in with the market order. I'm going to put the other one there. I think I would rather favor the short end, though, as like that this move is going to come back because the Federal Reserve is concerned about the rate getting too low. Like I think I'm skeptical that I'll take 2 there. Because there's an iceberg there. I'm skeptical that the interest rate can get below 3.8. Okay. So I'm seeing an iceberg at 112.00 half. Okay, so I got one lot. So now I've moved my average position up a little bit. So this is a little bit better, right? We're expecting a distribution around 112 even. Right now it's at 112.00 half, but I think that 112 even, because it's an even number, is likely to trade a lot. Okay, so I want to see a distribution that's or like this, right? So if my break-even point is at the top of that distribution, that's good. I would rather it be well above that distribution, though, right? Then that's really the goal. Is like get your average position to be well far away from the current distribution, so that even if it breaks out the wrong direction, you're still able to scratch it, right? And in that last one, I had come into the move really early. In this one, I'm Sorry, I came into the move really late. This time I'm coming into the move really, really early. So the risk in this one is that the move is not done yet. Okay, just so you know, we have new on the runs listing on both the 10 and 30 tomorrow, and the new cheapest to delivers for the H23 contracts have higher coupon rates than the current ones. Ooh. Okay. So let's think about that. What will that change? Does that mean that we could have a significant change when they list it tomorrow? Does that mean that like overnight it could like shift really fast? Wait, I thought that they didn't change that sort of stuff until like the new contract changed. Like, wouldn't that not happen until December? Until we were trading on March contract? Oh, you're right. We are approaching the roll week. Next week will be the roll week, right? Where's the calendar? Yeah, next week will be the roll week. It will be Friday, won't it? Is it Friday or is it Monday? I forget. So first call is 3 days. I forget. If I had been able to get filled out another contract, there would have been, you know, coming out to the other side of it. What the hell? So I search ZN futures and the entry for it on NASDAQ.com came up before the listing on CMEgroup.com. CME Group, you need to work on your search ranking. I forget where first call is. You guys extend Thanksgiving to Friday? I mean, when there's a holiday on Thursday, some companies and schools extend it to Friday. Or people just transfer a day off? Oh, I am. It's a good question too. You guys are way ahead of me. I'm feeling like I'm slow this week. Okay, so Thanksgiving should be on the 24th, right? No, that's not it. Why is it so hard for me to find it? I think in this instance, it might be distributing a little bit lower than where we got, so we kind of got a good price. Okay, it's 3 business days before his intention day. 1, 2. 1, 2, 3. So the last day that we want to trade this contract is the 28th of November, right? And the 24th and the 25th should be the Thanksgiving holiday. I don't think that everybody gets a Friday off, but nobody ever has school on that day at least. New Squawk is talking. Wondering if this resting will hold. It's been there since 4 a.m. at current price. S&P 500 is an interesting one. So you can see the issue on this one was that I didn't get enough contracts filled. And so even though this one is running for me, I'm not going to make as much from it, right? And I kind of feel bad because I'm liking this spot, like right. Oh, okay, so that's definitely like a. I was looking at that big order at 30 and nobody being willing to hit it and saying, well, that would be a good place to get out at. But look, it bounced back really hard. Somebody came and bought up a bunch. It's still early enough in here that I could try taking a few more contracts here now. Well, it doesn't look like they're gonna get me. When I take I tell you what, even if it's sim, whether I take a winner or a loser, it definitely like affects the brain. It's like when you get the winner, you get the dopamine, and I get that much better. And when you get the loser, it hurts, and your mentality, that's the crab thing. Like your mentality declines. So taking that loser on what was kind of just I'll just kind of show you for an example here, right? And here's the problems with it. Well, it was a loser, but now I kind of feel bad about it. like now that we've done all of this, I'm kind of looking at this being like, well, if I want to see higher rates, we might be coming into a place where I might be able to get an okay price to try for a higher rate. But I don't know if I'm on the ball enough today to really be taking on risks. So let's just see how we can go on this current position that we have on the experimental sim account. Carl Quintilla tweets about Tom Brady has removed the laser eyes from his Twitter account because he lost a lot of money from FTX. Well, that's okay, because that probably means that we'll see a lot more Tom Brady in commercials and so forth, and I kind of like the guy, so I would be okay with that. I mean, I didn't necessarily like I was always rooting against him, but I still think he's a fun guy. Did you see the new bidder for the Miami Heat Stadium? No, I haven't. Was it another one of those where they're going to give him a huge taxpayer subsidy and stuff? It's a new logo. Oh. I was watching a video the other day where Mark Cuban, I think, talked about buying the Mavs. And, you know, like when you think of that kind of investment, you think of it as like a vanity investment, right? It's really like, I own my own sports team. I can go out and be a part of the team, etc., etc. But he made a ton of money from it. He made a ton of money from it. It was a really good investment for him. I was like, okay. I think that if I got to the point where I was like a big deal investor that was making investments kind of like that, that would be too much of a distraction of an investment for me to take. You know? Oh yes. Okay, so New Squawk was just pointing out that the British pound is taking a little hit there. They are indeed. Okay. Now that one was perfect because I'd get a pretty good spot in line for trying to take one tick out of it. Okay, that should be a fill. I don't know why it's not. Okay. Do it again. Oh, I need to search for it. Miami Heat logo. You saying if I like search, there should be news? Oh, because they had a relationship with FTX. Okay. That's funny. Oh, it's Bang Brothers? What? Oh, yeah. You know what, D? I was going to be like, I don't care. Maybe I'll look it up later. No, I'm glad that I followed through. I was like, it's D. D wouldn't say something to me unless it was entertaining. I went through with it. Yes. Bang Brothers submits a $10 million Miami Heat arena naming rights offer. There's no way that they take them up on that. That's just got to be like a PR move, but that's effing hilarious, dude. Jeez. Well, I don't know, guys. The treasuries look kind of heavy here because I was barely able to get like one contract filled up there before they flipped all the way back down to the lower end of the range. Now, I think that we could still be stuck here for a while. In fact, probably, well, it might not make another big move until well after we're gone, but my opinion on range charts, I like a range chart because it shows you all movement, especially in the 10-year. But be very, very careful about any kinds of indicators or signals that you use based on range charts, because they tend to bias your signals towards movement, right? So basically what happens is you end up taking trades based on price move And that kind of will get you into like a more furious action where you might just get shaken out, right? So Renko charts I hate because Renko charts lie to you, right? Renko charts lie to you. Range charts don't lie to you. It's just like if you're doing a backtest based on range charts, I wouldn't trust the backtest that you got, because a range chart, basically backtesting on a range chart makes your results less likely to translate to live. This is basically the long and short of it. It biases your algorithm towards action where it's not actually going to be realistic. So it was like that video. Remember that video I made where I responded to a Daniel Inskeep video? Right? One of the things that they were doing is they said, oh, you have to backtest it on a line break chart, right? Well, that right there is a big red flag. They're either that vendor is either straight up lying or just super naive. Thanks for debunking these worthless altered display formats, range, Renko, etc. The area chart. Are you talking about the ones where it you know, everything underneath is colored in? I've always wondered, because like almost every charting platform now has the ability to do it as area, and I'm like, why? Why? Are there really people out there asking for that? Probably there are. Probably there are, actually. Oh, they're going to trade it down into a new price. Type it in. Did he not send an email? Was he not able to send it? Let me refresh her. No, I didn't get an email. Isn't there a difference between charts that use time charts and use price or something? Well, so like here's the thing. Okay. You could have so it's kind of a funny thing. Okay, so remember we were saying that like if you form a liquidity hole, you might just sit there in that spot forever. Or it looks like we might be doing something here. I mean, that's a lot of volume trading there at 30. There's a lot of volume trading there at 30. So I'm not quite sure what to think of all of this. That might be a problem. Okay, but I don't think that we're necessarily gonna like break out here anytime soon because of that. Let's just see if they have some oomph, because they did clear it and there was a good offer on it too, but it ticks back up. Okay, see, so that's. If I had extra contracts on, I think I'd be trying to take one off here at 30, because I don't. And that's kind of a sign that we're going to get stuck there. Okay. So you could be stuck there at that price forever and ever and ever and ever. Well, the technical analysis guys, they don't like that. for whatever reason, they don't like that. So they say, oh, well, can I, because their theory is price action, right? Price action. The only thing that matters to me is when the price has moved. So I want my chart to focus on the price movement. And that's why you get things like tick, volume, range charts, right? Is that they compress out all of those periods where it doesn't go anywhere and it goes sideways for a long time, which is kind of unfortunate, because the reality is those are really, really valuable, right? Seeing that price stayed in one location for a really long time and a ton of volume traded in there, that's one of the most key empirically proven pieces of information that we can use to try and base our trades around, right? So anyways, when you get into one that prioritizes price movement, then basically what happens is the more the price is moving, the more bars you're going to get. That's what it ends up being. Is you could have two charts. One's a 1 minute chart, and one is a tick or a range chart. And when price is moving a lot, that other chart is going to have more bars. Okay, more bars means what? you're more likely to get an entry signal on your signals. Whatever indicators you have attached to that chart, you're more likely to get a signal simply because there's more bars. It has more, like if it's a moving average, for instance, moving average, great example, more bars, that means more time for the moving average to get down here, so that if it flips over, it's going to go over the moving average more quickly, and it's going to cross the more moving average more often, right? And when it's going to do it, it's going to be more likely to do it in fast action where the price is moving around a lot and so forth, right? So what it does is your algorithm, it ends up being more likely to get in volatile action where, if you put a market order in there, it might not give you the market price that the algorithm thinks it would. Or if you're trying to do a limit order, you might not have gotten filled there, right? So any backtest based on a non-time based bar basically becomes biased in a way that makes its results less likely to translate to life because of that. Does that make sense? I think that was the best explanation I've ever been able to do of that thing. Okay, it looks like the volume imbalance is still to the downside. They are having a little bit of difficulty getting below 30. So, but I think that, I can kind of hold this for now, at least. Check your calendar. There will be some sellers tomorrow and the rest of the week. What does that mean? Tomorrow we have PPI. Is that what you're talking about? I don't know. There's some people sell every day. That's true. I do think that at least starting here for the beginning of the day or the beginning of the week, that our bias probably should be short, because it seems based on the comments that we got last night that the Federal Reserve is unhappy about current prices. They don't want the interest rate to go too low. So you talk way too much for me to understand. I'm sorry. You know what? You don't have to know. This is such a funny name, dude. I'm just going to call you. You know what, a lot of the things that I say are going to seem really, really complicated in the beginning. And if you're just sitting here and watching the treasuries every day and you listen to me every day for like a month, after a month, you're going to be like, this is actually really stupid, simple stuff. It's actually quite simple stuff. It's not the thing that your brain would come up with the first time. That's what I find about the market every time, is you come into the market and you're like, okay, what is my intuition about the way that the market will act or behave, right? Your first intuition almost certainly going to be wrong every time. And that's why markets continue to confound people, because they do not operate according to what our natural human intuitions are. So that's why it seems complicated, because they're ideas that are so foreign to you. But after a month, it's just going to be like second nature. So like another good example of this is going to be, I have a video that should go live at the end of this stream where I go through my workspace. So I show you the key settings that I'm using in Jigsaw, all of the instruments that I have set up, and why I have them set up the way that I do, right? And it's a long video. It's like 30 minutes long. I was watching through it. I was like, oh, people are going to say your setup is too complicated. Because when you look at like the number of things that are on here and like all of the settings and stuff that I have, it is actually a lot of little things. But in the end, it's really simple. It's really simple. I just watch here. I just look over here in this general area for auto-correlated order flow. That's the main gist of what I'm doing. It's not actually that complicated. It's just that, well, it's a walk money, making money just be another walk in the park. No, unfortunately not. Because the issue is that There's just so much that we don't have access to, that we don't know. That's what makes it so hard. That's what makes it so hard. If we knew everything and we had all of the resources, we could probably predict what things we're going to do like most of the time really well. Right? But there's a key thing in there, right? What am I trying to teach you? What I'm trying to teach you is that the most important trait for a trader is humility. Because if you come in and you think you know what you're doing and you're really aggressive with your bets, you're probably going to make money. And you're probably going to have a point where you hit it really big and you think that you're a god, right? But then you give it all back, right? So being aggressive and knowing things, that's how you make money. But knowing what you don't know, that's how you keep it. That's how you keep it. And so the people that are going to be successful at this game over a really long period of time, it's going to be the humble people. And, you know, being to come in here and say, wow, well, this all seems really complicated. I don't feel like I understand what you're talking about, that sort of a thing. That's actually a really good sign, right? Like that makes me, I keep track of all you guys that come in here, or at least I try to. I should start like taking notes. I should be like, okay, on today, Lucas said this about volume profile, and I suspect that he has his own theories about things that might contradict my own, and that he's trying to, you know, poke holes in what I'm saying or something. You know, I maybe I should do that, but I don't do that. But I do keep track of how you guys are doing. And there are some people that come in here and I'm like, well, I don't really care for that guy. And they usually don't stick around for very often, but it's always these people with the ego, right? If somebody comes in and they're like, I don't know what's going on. Those are the people I want to stick around. Those are the people that I feel like actually stand a chance, right? Ash K. Just shout America F yeah, then flip a coin and press buy or sell. That would be totally a great way to do it, wouldn't it? Take the risks you were being paid to take and hedge the others. Yeah, there you go. Unconscious incompetent is dangerous. Yes, exactly. Goose, by the way, thanks for stopping in. He's a lurker that's been around for a long time. The best thing you said months ago was to know who's trading. Yeah, well, we always... Yeah, this is the thing that I think holds a lot of retail traders back, is that they say price action is all that matters and why it happened doesn't matter. And if you take that perspective, I think that you're kind of missing out on one of the best learning opportunities, is to come in at the end of the day and say, okay, here's the movement that we saw. Here are some of the news headlines that we saw. Here's the economic numbers that we saw. There was an auction today, and then kind of, you know, guesstimating, okay, this move happened because this flow, and this move happened because of this flow, right? And you can like have theories. You can say, okay, this move, my top 3 theories for it are this, this, and this. And then the next day you might get a piece of information. Like you might get a story that says, oh, this bank decided to buy a ton of treasuries because of this reason. You'd be like, oh, okay, so that confirms this theory and disproves this theory, or whatever the deal is, right? And if you keep track of that sort of stuff, and you don't have to write it down. I don't write it down, but I'm always doing that game in my head. And that's how you learn. That's how you learn. These are the things that moves the markets. Here's in this situation. So actually it was pointed out something really, really important for us today, I think, which is that the interest rates on the next bucket of treasuries next month is significantly different. So I think that means that the quote unquote gap that we'll get when we switch over to a different contract is going to be pretty big then, huh? It might be, the price might be significantly lower on our chart if we don't like have our charts back adjusted. BM, I'm still a volume profile trader, but these people have definitely to switch their priorities. First, the fundamentals of the move, then your technicals to try writing it. Yeah, for sure. Maybe we need to wait for Europe close. I do wonder if the action that we've been seeing today. So what have we seen today so far? I mean, the 10-year has been fairly close, but we did have a significant move up and then a significant move down. And I do think that that may have been driven by Europe, because when I'm looking at correlated instruments, like the one that sticks out to me the most is the British pound. Although it wasn't a huge move in the British pound. I also have to say, like, gold did really, really well today. Other than that, it's a little fuzzy why it's doing what it's doing. So, no, London close is at 11:30 Eastern time. So it'll be 30 minutes from now. Yep, they do at 4:30 their time exactly. Anyways, yeah, it's just, and it's not even fundamentals. So Kyle, I think that what happens is that a retail trader comes in and they think, oh, I should just trade fundamentals, and then a piece of news will come out. It'll be like, the consumer price index was high, but it was less than expected. Okay, so if inflation is still high, that's bad. That the market should move down, right? No, but because it was less than expected, they move up. But then you even get it in a situation where it's like, okay, CPI comes in and it's less than expected, so we should move up, but then we don't. We move down. And it could be any other reason. There could be a bunch of other, like maybe it's the end of the month or all sorts of other crazy things. And so the retail trader, that disjoint, they just can't reconcile it in their minds. It's just like, here's the fundamentals. It doesn't do what I expect it to do based on the fundamentals. And so the conclusion that they come to is the fundamentals don't matter. Fundamentals don't matter, and I should just use technical analysis, right? I think that that's how you come to that point, which is why I think that the order flow explanation of markets is so useful, because it's order flow is sophisticated enough to answer those questions. It's sophisticated enough to come in and say, well, yes, maybe people were selling because of that piece of news, but then there was this other thing like end of month rebalancing that actually ends up being more important. And you'd think, well, from a fundamental perspective, it's not more important, is it? No, but what matters is the orders, the number of orders that are trading. And if it's a big institution, they're going to move the market, right? And that's how you come to that. As time goes by, I realize more and more that point and click traders are outdated. We may need to go hybrid for day trading. I certainly think that there is some stuff that we can do based on automated trading that could significantly augment our trading. Is like the thing that I'm doing right here. I feel like that could be automated to some extent. Like I should be able to come in and say, I want to start market making, take contracts on this direction. Here's the maximum number of contracts that you should take and the minimum number of contracts that, like try and let at least one run. And instruct the algorithm to just like always try and get at the front of that queue, Yeah, fundamentals equals know what flows are about to come. I expect a large buy flow. Yeah. Well, I wish we had a better term for it, right? Because it's really not fundamentals as traditionally considered, right? That's why I call it predictors of order flow. But we need a more marketable term than predictors of order flow, and I just haven't figured out what it is. Other than just calling them flows. Just know what the flows are that day. Yeah, we need a system that we can turn on and off that can be adjusted according to volatility volume with some degree of executing some of the orders ourselves. Yeah, exactly. But ultimately, what I'm getting at is that ultimately the primary objective of this system would be to get us a better spot in the line, right? Well, you know what? I just forgot that I gotta get going. So, we talked about a lot of stuff. Make sure you check out the video on my channel. You know, a lot of you guys will know that stuff, but you might find it interesting. It's just kind of going through what my setup is. Quiet. Start. No. Fed. Jawbones. Rates already too low again. Save, that's my question. Okay, guys, I gotta get going. I'll see you tomorrow. We can continue this. In the meantime, stay excellent, team.